Welcome to 7 Reasons to Take Profits. Do you trade futures, stocks, or Forex? Do you trade intraday or much longer term? Most traders like seeing examples in their favorite security or time frame. When they see examples of ways to use these techniques, this presentation will show examples in multiple instruments and various time frames. Now, the first technique we're going to talk about for when to take profits is the 3 pivot line. Very simple. You see a chart and you're up here near the highs in the 50s, and as you see this, you're able to draw a line that connects 3 pivots. 1, 2, 3. Nice, easy, straight line. Once you get this, it's generally a good time to take profits. As you look at each one of these charts, you see that they go down, and as the prices go down here, you can draw that nice 3 pivot line. Once again, draw the nice 3 pivot line. Once again, draw the nice 3 pivot line. And it's time to take profits. Here, if you're an intraday trader, you draw a nice 3 pivot line underneath the prices. And since you probably got long here, you're now up here, and it's time to take profits. Let's say you're trading intraday, you're trading the E-mini. This is an hourly chart and a span of several days, and sure enough, you get over here, you see prices are going down ever so slowly and quietly, and you draw your 3P line and you get out because you know it's time to take profits. And if you're trading the Forex, here's the euro over the Swissy, and on a 15-minute chart you can clearly see that you drew your 3 pivot line, probably got short over here, you're now over here in prices, or you got short here and prices are now over here somewhere, and it's time to take profits. Now, the second reason to take profits might be using the correction reaction line. Here's what happens. Let's say you draw you're over here somewhere at this point in time here. You draw a trend line. Prices have come down and they come up. You draw a trend line. This is your center line. And then you take the distance from that trend line to the previous point, and you measure that distance and draw what we'll call an action line. And then you draw an equidistantly further line on the other side of that trend line over here. That's called the reaction line. If prices go through that center line, go up to that reaction point and stall around there, time to take profits. Here's another example. This example is in the crude oil. Notice September crude daily chart. Here you have your trend line. Here you have your action point. Here you take the distance. There's the reaction distance. Boom. What do you have? Time to take profits. Reason number 3. Prices are near an action line. Wonderful concept. You have a nice multiple pivot 3P line. Remember that center line we talked about, right? A little bit. Well, up here you drew your action line, and as prices get near an action line, what do? Time to take profits. Here you have something that's called a not. What's a not? Very straightforward. Prices, as they come down, and they're still higher than the previous lows, they could be in a correction. So what do? You draw your median lines. Most of the time, as prices go down, prices will stay beyond that median line. In this case here, notice that as prices went down, they weren't able to stay close below the median line, and if you draw your median line in parallels going the other way from the other pivot, what happened? Prices weren't able to stay below the lower parallel. Not below this one, not below that one. Not. Reason to take profits. Here's another example of the not. Here you probably got you probably got short over here. Prices are going down. And you see they're kind of stalling here. You draw your median lines. Prices aren't able to close below the median line. They're not able to stay close below the lower parallel. What time is it? Time to take profits. Now you've seen 4 of the 7 examples we're going to show you here in time to take profits. And this is all a small portion of the advanced Andrews course that you can find at andrewscourse.com. Now the course itself takes you from the very basics through the advanced know-how that helps you to understand the finer details involved in what is shown here and a whole lot more. In the course, you get to see over a dozen reasons to take profits and reasons to enter a trade. There are over a dozen online videos you can watch at your leisure. There's a manual that is part of the course, a private and email discussion group, and as a bonus, we include our software. Now, if you contact support@andrewscourse.com, you'll get something very special. For those of you that are extremely advanced, we have a portion of the course called Andrews and Elliott wave that are combined, where you see what occurs at different Elliott wave points by using the Andrews techniques. It makes Elliott wave a lot less confusing. Email me and ask how to get the special discount price available only for a very short period of time for the course, and I will include as a bonus for you combining the Elliott wave and Andrews techniques at no extra charge. Now, let's move on and let's see an example of this Elliott wave and Andrews combining. Here's how it works. Notice that from here, this is a pivot C, prices go up to a 1, down to a 2, 3, 4, 5. That's the Elliott wave concept. Prices go up, and then they come back down for some kind of an ABC, and then they go up for 5 waves more. That's the simple, straightforward part of the Elliott wave concept. But for the most part, it's not that simple and straightforward. But with Andrews, well, here's an example. What you do is you simply draw your median lines, and you see here prices barely make it. That's nice. And then they go up and they break through the parallel, and they break through what's called a warning line. Very easy to calculate. Now what you get is prices closing past the warning line at the pivot 1 and coming back down to a pivot 2. So if you got short here and got short here, you know when they come down here, as a result of seeing this, it's time to take profits. Here's another example. Here's ConocoPhillips stock. And you see here you have 0, 1, 2, 3, 4, 5. Classic Elliott wave pattern. And then what happens? You get the A, B, C. And so you draw your median lines and your parallels and your warning lines. And what happens? Prices go up for a 1, close past it, that warning line, and then come back down for a 2. As they come back down for a 2, if you got short here or short there, or even short up here, it's time to take profits. Now, another concept that is very interesting for time to take profits is the major H. Whenever you draw lines, you have minor parallel lines and minor median lines that you draw, and major ones, regardless of the time frame. This is a 60-minute chart in the E-mini, for example. So, let's say you got long somewhere down here. Prices go up, and they come down, and they go back up here again. Notice that prices zoomed down through the ML, came back over the H. As they come back over that H, it's time to take profits. Let's see another example of this. Well, there we go. Notice that prices are down here, and if you drew your minor median lines, you'd see that they zoom through the ML and are back down below the H here. In this area here, if you got short up here, it's time to take profits. Now there is one more reason to take profits that we're going to show you here, and this is something that's been around for a very long time. It's called expanded pivot formation. In Andrews terms, it's called reverse point wave if you studied it under Wells Wilder, and it was called something else back around the 1900s. And what you have is you have a 5-wave pattern. And so you start here 0, 1, 2, 3, 4, 5. If you draw a line from pivot 2 to pivot 4, up slanting. If you draw a line from pivot 1, 3 to 5, down slanting. Very simple, very straightforward. What you do is from pivots 3, 4, 5, you draw your median lines. Prices close beyond the median line. If you went short up here or short up there, it's time to take profits. So now you've seen 7 reasons when it's time to take profits. Of course, you're going to need a lot more detail, and You're going to need to learn these techniques from the basics up so you have a good solid foundation and understanding. Contact us, support@andrewscourse.com, and there will be a time, even if you start as very basic, when you're going to be extremely advanced. And then there's going to be a very special portion for you that covers Andrews and Elliott combined. It's incredible, where you see what occurs at different Elliott wave points by using the Andrews techniques in a very straightforward manner. Ask me and ask to get the special discount price. It's only available for a short period of time, and I will include as a bonus combining the Elliott wave and Andrews techniques. Remember, if you look at those charts and see what's really there, it's time to take profits.